Okay, two questions here. Number one, how to cease being a tax resident? To cease being a tax resident, you need to fail all of the residency tests. To fail all the residency tests, you generally need to get tax residency somewhere else. I've covered residency tests quite a bit, so let's just assume that you can become a non-resident, but you own Australian real property. How does it continue to be taxed? First of all, note that income from Australian real estate is Australian sourced, therefore you must always pay Australian tax on it, even if you're a foreign tax resident. Foreign residents also don't get a tax-free threshold, and there's lower thresholds to pay higher rates of tax, so they effectively pay more tax than Australians owning the same assets. On the capital gains side, foreign residents do not qualify for the 50% CGT discount at all. However, if they owned it for a period when they were an Australian tax resident and also when they were not an Australian tax resident, they get to apportion it based on a number of days. So you can still often get a partial exemption for the 50% CGT discount. One super strange policy is if you had a main residence in Australia, you cease your Aussie tax residency, you go somewhere else and sell it, you get zero main residence exemption, no matter how long that property was your main residence. This policy came in about 4 or 5 years ago now, and it's been described by many, including me, as being weirdly draconian, and not having that apportionment that the discount did means it's just really unfair. Anyway, so often what we do is we transfer the main residence to a trust or to a family member or to a company before someone will leave Australia, claim a CGT exemption and cop the stamp duty cost, because that stamp duty cost is often worth much less than continuing that main residence exemption. But say you go overseas for 3 or 4 years, come back to Australia, resume your main residence and then sell it, you can still fully qualify for the main residence exemption, which is really weird. So you've got to pull out the crystal ball to an extent and say, well, am I going to come back? I don't know. But if you don't know what you're doing, you're potentially getting yourself in a very expensive situation where a full exemption can be worth hundreds of thousands of dollars of tax savings, but then you lose it entirely just because you don't know what you're going to do next. So property and non-tax residents don't mix very well. You'll pay a lot more tax than the average Australian punter, but foreign investors still love it, particularly from Southeast Asia.